Hi everyone, I'm Martin Bamford, and in this new video, a warning from the Bank of England about the risks to financial stability posed by Bitcoin and other cryptocurrencies. This is a new warning from Bank of England Deputy Governor Sir John Cunliffe. With cryptocurrencies, including Bitcoin, becoming more mainstream, Sir John and the Bank of England are concerned that price volatility could ultimately damage household wealth. Speaking to the BBC, Sir John explained that the bank needs to be prepared to contain these risks. This isn't a significant risk at a UK-wide level, at least it's not for now. As things stand, around 0.1% of UK household wealth is held in cryptocurrencies. An estimated 2.3 million people in the UK hold cryptocurrencies, with an average holding of just £300 each. What that means is any sharp fall in the value of the crypto market, while painful for those few that do hold them, is very unlikely to damage the wider financial system. But it could pose a risk in the future. Despite these modest holdings, Sir John warned that cryptocurrency ownership is growing very fast, and there is growing interest in digital tokens from established investors, including fund managers, so institutions. And that risk, assuming ownership does continue to grow, it's a risk directly related to the extreme levels of volatility for prices that we see in the crypto market. What makes Bitcoin and other cryptocurrencies so inherently risky and volatile? Well, it's down to a variety of factors. Cryptocurrencies are still, in a relative sense at least, a very new market. While they gain an awful lot of media attention, and there are signs that ownership and levels of interest are rising fast, they've got no established history like mainstream investment assets like equities and property. The market cap of Bitcoin, of Ethereum, of others is growing bigger, but price movements can still be sudden if a relatively small number of speculators buy or sell coins. So-called crypto whales can also work together to manipulate prices. They coordinate their transactions. And of course, the Time magazine Person of the Year, Mr. Elon Musk, is able to move crypto markets too, just by tweeting something. Another factor behind market volatility for Bitcoin and others is the speculative nature of these tokens. I've said it before and I'll say it again right now. This is not an investment, but it's a speculation or a gamble. Because the price of cryptocurrencies are based on speculation that prices will go up. People buy into them hoping to make a quick profit, and that approach leads to even more price volatility. Cryptocurrency speculators are, in the main, inexperienced investors. This is not a market for wise sage heads, but for those hoping to achieve exponential growth in their wealth and get there very quickly. Hodlers aside, that doesn't make for a particularly stable market. Newness of the cryptocurrency market extends to the underlying technology too, the blockchain, with volatility prompted by emerging fears about issues with the systems. Theoretically, a decentralized ledger is brilliant, it's inspired, it's genius, and I'm hopeful of future applications. But in practice, all systems are flawed, and the emergence of a previously unforeseen risk in that system can crash the price. Double spend, anyone? Volatility also comes from the nature of cryptocurrencies. They are purely digital assets. They've got no physical backing. You can't accurately value something like that, which means prices are based solely on demand at any given moment. Even some so-called stable coins, things like Tether, they've got volatility baked in because of the uncertainty around their backing. As unregulated investments, there's nothing beyond the crypto community itself from keeping things honest. So what happens if cryptocurrency ownership in the UK continues to grow and volatility in the market continues? Volatility will continue. That's what's keeping the Bank of England awake at night as it considers risks to UK financial stability. But turning to the action the Bank of England could take in the future to manage the risks posed by growing cryptocurrency ownership, Sir John said, "We really need to roll our sleeves up and get on with it so that by the time this becomes a much bigger issue, we've actually got the regulatory framework to contain the risks." That's a really key message there from the Bank of England. They are exploring a regulatory framework for cryptocurrencies, and cryptocurrency speculators do not like that. The comments from Sir John Cunliffe followed the publication of the latest financial stability report from the Bank of England that considers the broader health of the UK's financial system. The report concluded that UK households remain resilient. That's despite the furlough scheme and other government financial support measures coming to an end. The bank also pointed to the continued uncertainty associated with with health risks and the UK's economic outlook. They believe that COVID-19 could still have a greater impact on the UK economy, especially as new variants emerge. And that's an interesting comment, because for this new fresh wave of the virus, we don't have any government financial support measures in place. In fact, I'm seriously concerned about the impact of this Omicron variant, of this latest wave, on businesses. The hospitality sector in particular is going to be decimated over the coming weeks and months. Already we're seeing this week people cancelling their Christmas parties en masse, and it's just at the time that these businesses need to do a really good trade. On Thursday, the Bank of England's Monetary Policy Committee will vote on interest rates, but financial markets are currently expecting no change to rates at this December meeting. Policymakers are going to be weighing up rising prices, high price inflation, with the risk of sending the UK economy into recession if they hike interest rates too fast or too far. Now, you probably already know my view on this one, but I don't see a rate hike happening this week. It's too soon, in my opinion, and a higher cost of borrowing here in the UK is very unlikely to have any impact whatsoever on price inflation here. It would just introduce another layer of financial misery as we enter the Christmas holidays. In their financial stability report, the bank said, but uncertainty over risks to public health and the economic outlook remains. For example, there are near-term pressures on supply and inflation, and there could be a greater impact from COVID on activity, especially given uncertainties about whether new variants of the virus reduce vaccine efficacy. Do you share the bank's concerns about the risks to UK financial stability as cryptocurrency ownership here continues to grow? And do you agree with me that interest rates are likely to remain on hodl this week? Let me know what you think in the comments, where earlier this week I was accused of being an establishment mouthpiece. Thank you, Gary Lake, who wondered who was paying me for that particular role. Gary, I'm wondering that too, because my check from the establishment still hasn't arrived. Thank you for watching this video. Until next time, I'm Martin Bamford, and remember, when it comes to your money, the more you know, the faster it can grow.